Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. I'm Dave Zaegel, your host as always. Today I'd like to talk about some recent events that really spooked the stock market and investment world briefly before everybody kind of calmed down and came to their senses a little bit. And it's important to go over these things as it pertains to investment management, retirement planning, and really your own sanity. So that way, when these things happen again in the future, because similar events will happen, you'll have a better idea of how to handle them and how to really not worry quite so much about them. First one I want to cover is regarding a company called Deepseek, which a couple of weeks ago came out with an open source large language model. They had a lot of claims that come along with it in terms of it not costing that much to develop, which got taken out of context isn't the best way to say it, but the numbers weren't really representative of the full cost. But I won't go over all that. Regardless, what happened was they were able to make this relatively cheaply in terms of the cost to run the final testing phase. And so a lot of people looked at that and the market overall reacted to it and said, well, wow, this company, they were able to do this really cheaply. Therefore, it's not going to cost as much for other companies to continue producing this artificial intelligence. And all these extrapolations came to be out of this one report, which had actually been out for a little while. But for some reason, it caught fire a couple weeks ago and really spooked the markets. So this company out of China reports these numbers of what it cost and what they had available to produce. And there's some vague details in there as well, but they reported a cost of only $6 million to run the last testing phase. That was not the cost to produce it all, but it was just the cost to run the last testing round. And so a lot of people said, well, gee, all this infrastructure, all these chips, all these data centers that are going to get built, we're not going to need as much anymore because this company just showed us that all this can be done for much cheaply than the other big tech companies are telling us they can be produced for. So a whole bunch of companies got whacked. NVIDIA was a big one that got hit. A lot of the energy companies that are going to be supplying power to data centers, a lot of companies that help build data centers, all got hit hard. And I kind of laughed when that happened. I thought, this is crazy. This one company from across the sea, which is a whole different subject because you have to be a little bit careful with numbers that come out of some foreign countries. A U.S. company would not just be able to throw out numbers like that without the SEC being all over them. There's certain standards of reporting that have to happen. But regardless, you got a company from across the sea announcing all this stuff. Who knows if it's really accurate? But everybody took it and ran with it and said, well, gee, now we're not going to need these data centers. We're not going to need this power. And I laughed because I said, that's total nonsense. But it's just a caution to everybody out there not to freak out, because I was getting a lot of questions, not necessarily from clients, but really from other people as well, on my thoughts on everything, because I'm of the opinion that this is going to be a very big trend going forward in terms of data center build out, need for power, need for chips, need for technology. And I did not at all think that the big companies were going to stop spending. And that was affirmed on their earnings calls. So if you go back and listen to Microsoft, Google, Meta, just all the above, not only did they not say that they were going to decrease spending, they actually increased spending, because that's what is needed in competitive environments like this. So when you hear something like this and everybody freaks out and says, oh my gosh, we don't need these companies anymore, just understand you don't have to do anything. You really don't have to do anything. You don't need to go sell all your stocks, because that was questions I was getting. Oh, should we sell out of all the technology stocks and go more safe to cash. And it's just, no, you do not have to. Now let's tie this a little bit into retirement planning, because on this podcast, if you listen to our episodes, you'll hear us all the time talk about having at least 5 years of investments that will give us a payback. So a little bit less volatile. So things like individual bonds, short-term bond funds, cash, CDs, things that we know will have a maturity value or a set date, or a set amount on a set date where we can get the money back for the next 5 years. So we have our income covered. That way, the rest of the investments can grow more aggressively and focused on the long term. So thinking 5+ years down the road. So whenever you have announcements like this where you say, oh my gosh, this new tech company's come out, it's going to wreck everything for all these companies, you have to take a step back and say, first of all, is it really going to? And secondly, does this impact our investments over the long term? If you're invested in really good companies, you're not as worried about what might happen next year or 6 months from now or 3 months from now or even a year and a half from now. You want to know that you are in solid companies, or if you're in index funds, that works as well. But you want to be in solid investments where you're worried about long term, how are things going to be, not necessarily what's going to happen in the near term, because all of our income is covered for the next 5 years if we structure these things properly for retirement planning. If you have this structure in place, there is absolutely no need to freak out when these events occur or things are announced. And that goes for the second event, which was tariffs being announced. The president came out and announced tariffs on Mexico, Canada, China. And that really happened, I believe, late on a Friday. And so that all came out over the weekend. The markets were freaking out. It did not do well on that following Monday. Actually, I think it wound up being okay because he paused on Mexico and then paused on Canada after some agreements were made. And then China announced some retaliatory tariffs that were nonsense. But regardless, there was a big announcement. And again, the market freaks out. But you have to be able to look past that when we're doing retirement planning and say, okay, there's going to be some ups and downs here. There's a lot of changes in the air. We don't really know how this is going to play out. Hence why we have 5 years worth of income set in investments where we know it's going to be less volatile. We know we're going to get a payback and have that income over the next 5 years. That way, even if you're worried about the current administration, I mean, some people are a fan, some people are not. Regardless, if you're looking past 5 years, who knows what's going to happen in between now and year 2, 3, and 4? We don't have to worry about that. We have our income there for us in case the market goes crazy. The investments in the stock market are focused long term, and we have our 5 years worth of income. So with things like Deepseek or tariffs, or we're probably going to be hearing a lot about tax law changes coming up. Who knows what's going to pop out that we don't really even think about right now? And something could happen over the summer that we have no clue was even in the cards. It's really important to understand that we don't have to freak out if everything is planned properly. I know we work with a lot of clients, and it's great to see over the years how when these things occur, they don't freak out anymore, because I've seen it over and over. Like, okay, this thing happened, this thing happened, this thing happened, this thing happened. All along the way, we were ready to go with income just in case, and the investments have been able to grow long term. That's all we really need to do from a planning perspective in the big picture. There's a lot of pieces underneath, but big picture, make sure you have at least 5 years worth of income covered. Let the rest grow. That way you can focus on life, and we can focus on other parts of retirement planning, like tax planning. How are we going to save on taxes over the long term, making sure our estate planning is in good order, all those things that can be both strategic and tactical over time. We don't have to worry about the investments quite so much if we've got the income for 5 years and can let the rest grow.